Wednesday morning, Market Chameleons. Everyone joining us for the first time, welcome to the Market Chameleon pre-market show. How are you doing, Dima?
Good morning, Will. How are you?
Today we have a special guest. So after we get through a little pre-market report, we will introduce everyone to Donald William. How are you doing, Donald?
Doing well. How you doing?
Awesome.
Hey, Donald.
Let's do the disclaimer first, Steve, before we get started.
Yep. So good morning, everyone. Keep in mind, Will and I, Donald, Market Chameleon, we're not registered investment advisors or broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your broker or call your registered investment advisor. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And with that, I'm going to share my screen. And before I do that, Will, do you want to talk about what we have on deck today?
Yeah, well, Donald Williams from Trader University is here, and he's been on before, and he has some very interesting ways that he uses Market Chameleon, how he transacts with the market. One of his big things is earnings, and we're right in the midst of earnings season. So Donald's just going to walk us through some earnings he's looking at, and maybe we'll talk a little bit. He's going to be doing a webinar on February 16th with us at 6 p.m. Maybe we'll talk a little bit about that. So all that right after your pre-market report, my friend. Okay,
awesome. So before we go to Donald, what I'm going to do is just quickly go over the pre-market movers, and then we'll hand it over to Donald. We'll talk about earnings and some of the things he sees is interesting. Couple stocks that I think are either moving today or just reported earnings or about to report earnings. So quickly, this is the pre-market report. These are stocks moving in pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I see 138 stocks made our percentage gainers list, 37 on the decliners list. So right now we're looking like a more bullish bias at the open. I'm going to take a look at what's going on in the S&P 500 stocks, and then we'll go to Donald. So I'm going to use the filters here above. This filters the list of stocks below. By using this in ETF filter, I'm going to pick S&P 500 or the SPY ETF. This filters out stocks that are holdings in the SPY. We see 40 of those made the percentage gainers list, 11 on the decliners list. So here still looks like we're setting up for a more bullish bias at the open, almost 4-1. With that, well, if you didn't have any questions popping up, I'm going to hand it over to Donald, so he has more time to kind of go over his analysis and take any questions at the end.
Perfect. With that being said, Donald's willing to take any questions. So if you do want to ask your question live, you can click the link at the top of the YouTube chat and come on over to the Zoom meeting, and we'll let you in. Or you can type the questions into the YouTube chat, and I will try to get them to interpret them and get them to Donald. So thanks, Dee, and Donald, welcome back. Always good to have you. The Chameleons are always very interested in everything you have to say around your strategies. What are you seeing today?
All right. Well, thanks for having me, guys. I always appreciate it. Do you mind if I grab the share screen?
Yeah, do whatever you want.
Let me just stop mine.
Right.
There you go. And I'm just will mute myself for a little bit so there's no background noise. I'm watching it. I'll mute if you need me.
Yeah, no, perfect.
Okay.
All right. Can you guys see my screen? I know it. Let me maximize this Excel sheet that I use.
Yeah, it looks perfect, Donald.
Okay, perfect. So if you guys haven't seen me before or don't know what I do, we've got a video on the Market Chameleon website, the YouTube page, that kind of explains the way that I play earnings. So make sure you check that out. But basically, this is my spreadsheet to track earnings. I keep track of certain earnings that I want to play. And this is the spreadsheet that I use. And you can see the red is this week. So the main ones I'm watching today, AMD and Google, right? If you know anything about me, AMD is like my favorite stock. It's my number one moneymaker every year. I've been a fan of AMD since it was like at $8. I was building computers in 1997 with my friend Marlon with AMD components. Back then, we thought we would be able to take Intel, but what happened is Intel crushed AMD actually, and so I feel this is kind of sweet revenge. We're kind of catching up to Intel, and we have a better product now. So anyway, I'm a big fanboy of AMD. Their numbers is I don't know how well you guys are at analyzing earnings reports. To be honest with you, I'm not the greatest at it, but I can read the surface numbers and it looks really, really, really good. And Google looked great as well. And I still think Google's priced cheaply. Now, the reason that I'm want to talk about these is one of my edges. This is the easiest edge to play when it comes to earnings, the easiest to understand. And I'll show you an example of it yesterday, and then what I'm going to be doing today on AMD and Google. So what I do is I come over here to my home tab and I'll put in the stock. So you can see AMD and Google. Is this readable, Will, Dimitri?
It is, Donald. Yep.
Okay.
Yep.
So what I do is I put the stock here and see, and then what they close the price at, right? This is the closing price from yesterday. All this information from G, all the way over to here comes from MarketChameleon that I've already downloaded and input into the Excel. So everything automatically calculates for me. This is the implied move, right? This is the average move that happens. And then this is the average gap that happens according to MarketChameleon. So this gives me the range up and down on all the stocks and what we should be looking for. Now, if anybody that knows anything about implied moves or IV, if AMD had an implied move to 127 and Google had an implied move to 2909, what does it mean now that the stocks are actually here? Let's just look up Google. What's Google at right now? It's not letting me. There we go. So Google's at 3,000 right now. So can anybody tell me what this means? Anybody know what this means? If we're at 3,000, the implied move was at 29. What does that mean? Any answers out there in YouTube land?
So Donald, there's probably a little bit of a delay between the time you ask something, then and they hear it on YouTube.
It can be up to a couple minutes delay, sadly, between the two.
Oh, really? Maybe I should just answer it then.
It's a Google's algorithm, but
it's
do you want me to answer it, or?
We got one popped up on Zoom saying it's overpriced.
It's overpriced? Maybe so. Maybe so. Me personally, I think Google's still underpriced, but I'm long Google's. Hence, you know what I mean. So, what I'm looking for is who sets these implied moves, right? Where do these implied moves come from? Dimitri, if you want to answer it, feel free. Yeah.
Sure. So the implied move itself comes from the option markets, right? Because if you go look at the option markets, you could actually bet on the move, right? On the over and under move. Because if you buy the call, buy the put that isn't at the money, you buy both options, that's a straddle, and the stock needs to move in either direction to cover the cost of both those options, right? So that's how you get the implied move. And if it does go beyond that and you bought the straddle, it will be profitable. It moved beyond the cost of both of those options.
So in that instance, Dimitri, and the one that you just said, right, when it becomes profitable, the person that sold you that option, what do they need to do?
Well, they'll need to cover it eventually, their risk, right? So that's what happens, is that the seller needs to cover their risk at that point, because they'll either need to buy back the options, or they're going to have to hedge the stock, or if they don't, that risk remains, right? So an unhedged risk is just that, so they'll either have to cover it with the options if they can, or they'll have to buy the stock to cover their delta risk or
There you go.
directional risk.
Exactly. And so what I want you guys to understand about the thesis behind this play, as retail traders, I'm sure you've been squeezed one way or the other, a squeezed short or a squeezed long. I'm sure you've been squeezed in it and you hate it, right? You have to get out of your position, lose the money, hedge the position. Well, in this instance, this is one of those instances where we can say, you know what, big boys, all you boys that sold the options, we're going to squeeze you. It's our time to squeeze you, the big boys, right? So all the people that sold these options, they're going to have to buy the actual stock to hedge, as Dimitri said, to protect themselves against the risk that they took on. Now, let me show you an example of one yesterday. Here, let me, there it is right there. Okay. So, can you read this UPS one right here? So here's UPS, right? Here's the range up on UPS per the options market, right? Now let's pull up the actual stock. UPS. I'll take these lines off. And let me turn off after hours. There we go. So now on UPS, the implied move down here, right? 215. This is where the option market had priced it. So we're a little bit above that, right? So everybody that was selling options is getting squeezed to hell and back, right? They're like, my gosh, is it going to come down? Am I going to be able to, get in at a lower price? And all that has to happen on these is just maintain for a little bit. And we're going to start squeezing people. We're going to really start squeezing people. And you get these pops that come up here and it goes from, a 220 to 232 move. Now, how do you play these? What's the way to play these? There's a few different ways you can play them. It depends on what your account size is, what you want to do with risk. You can buy in the money calls. You can just buy the stock. So for an example of that, I actually bought Google stock. As soon as the earnings report came out, I saw it. I knew it was going to be a 1.5 times play. They're doing a 20-for-1 reverse split. You guys remember what happened to AMD, NVIDIA? For whatever reason, you do a reverse split and like all of a sudden retail traders love you. I don't know what it is, but it's just the market. So I literally bought shares. However, when the market opens, I'm going to be looking to buy out of the money calls on Google for cheap. I'm looking for really cheap calls to get into on Google. Now, we're going to be opening near 3,000. So the question is, well, what's a realistic spot that Google can hit? You think it can hit 310, 350, 31, right? Now, normally in a stock that is priced around AMD's level, I'm going to look for around $1. That's what I want. And I'll give you an example. Yesterday, I have a guy that I mentored named Anand. I'm going to have to give him bragging rights here. He hit this. I missed this, guys. I was trying to price UPS options, and in the first like 3 to 4 minutes, you guys will see this happen sometimes. The spread was huge. It was like a $5 spread, and I didn't have my order in. I wasn't ready. I wasn't prepared. He had his order in at 95 cents. And as soon as the options price, he got filled. Boom, he got hit. I didn't. So I put my order in after the options price, and I was like, well, let's see if I can get filled, but I didn't. So he immediately got hit for 95 cents. Immediately within 2 minutes, we're up 100%, just like that. And that's what we're looking for here. We're looking for just quick hitters that are going to get you that 100% real quick. And then you can allow some of the other ones to go for a little bit longer. I call this my 10 bagger. What I mean by that is it has the opportunity to get you 1,000% return. That's the goal. That's the ultimate goal, right? Always, I trail and trim on the way up, but that's the goal. So on AMD today, what I really look for, it's 1.5 implied move. Okay, so I come over here here is UPS's 1.5 implied move, right? Here is AMD's, you can see right here, and here is Google. Now you go back and you look at the stocks and the stock price. Let's see, AMD's price right now is, let me turn back on after hours here. About 130, right? So we're in between that over and 1.5. If we start squeezing over this 1.5, I think we're going to squeeze even more. If we stay under, we could get that pullback that everybody wants so that they can cover they can hedge their position, right? On Google, however, we're actually over it, right? We're over the 1.5 by, $5. So we're right at that $5 range. So these are some of the, is the market pulling right now? Let's see. Yeah, a little bit. I mean, we've pulled back about $3 from 8 a.m. So yeah, so this is expected, right? So the other thing that you want to keep in mind is, I always say this with everything. What are the market conditions? To give you an example, last week, the market conditions were very different than they were this week, right? So let me show you. Last week on Tesla, this is my conversation on Tesla. I was trying to set up a short on Tesla. Why? Because the market was like, hey, let's just sell. Everybody sell, 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 sell. So I was telling my buddy, I took this out. I trade with a bunch of 7-figure trader guys, and he was thinking that Tesla was a long through ER. And I'm telling him I'm shorting. I put a poll out on Twitter. 70% of people thought it was going to gap up. 30% thought it was going to gap down. Everybody's like bullish on it. For me, I was looking to short. In the market conditions we were in, it was hard for me to see Tesla putting on an ER that would say, you know what, let's reverse and go the opposite direction. And so putting on a bearish trade on Tesla through ER, right? Now we're in a little bit different of a market. There's buyers here. And the question is, are we going to allow, is tech going to finally be able to be pulled out by Google, right? By Apple's earnings? AMD, you start having these really good earnings reports. Is that enough to placate the bulls, the bears, right? So any questions so far, Will?
You're good, Donald. No questions have popped up. There was one comment, I think by accident you mentioned reverse stock split. This is a standard stock split on this Google. That was brought up in the comments.
Oh, thank you. Yeah, did I misspeak?
No worries.
Did I misspeak? All right.
We did, just out of curiosity, because one of our regulars popped up, and one of his strategies he looks at the selling the wings into these earnings, and Google had popped up on his radar. I think it was Mike McRae saying he sold the Google 3,250 calls versus the 2,350 puts, took in $1.65 on that expire and strangle Friday.
Nice.
I mean, how much do you think, in your opinion, does this Google have to run?
What I'm going to be looking at I'm going to be looking at about 31 to 30.50. So I'm going to see what I can price those at to see. Now, to say that we've gone in 1, 2, 3, what is this, day 4, right? Google goes up 20%. That's a little crazy, right? So knowing where we are, I'm prepared to stop out pretty quickly if need be. Again, the great thing about these plays, if you average, 200, 300, 400% winners, how often can you be wrong? Quite often, right? So just mathematically, if you win 200, 300, 400% of if that's your average win rate, you know what I mean? You can be wrong a lot. So I don't mind stopping out of these. And that's one of the things that's hard for newer traders to do. It's just stop out, right? I have no emotional attachment to this trade. If it doesn't work, I'm going to stop out. But I'm also going to give it time. I'm going to let it percolate, marinate a little bit, right? Because I do know factually, we know factually that people are trapped, right? One of my favorite plays is to trap shorts. I love it. I love it when shorts get trapped. I love it when longs get trapped. Anybody that's trapped, I love it. And we know factually people are. So I'm going to give it a shot. Same thing with AMD. You know, we'll see what we can get AMD at like 135, 140 to price out. But that's kind of the ranges that I'm looking at. Again, it's more about percentage returns for me than it is dollar values. You know, so if you just think, hey, you know what, they're stuck, they want to go up, you can just buy in the money, right? Buy your deep in the money, or you can just buy the stock, however you wanted to play it. But for me, I'm looking for a percentage return here. And if you go back and you watch the video that I did with you guys, I give you an example where I invested in TTWO. It was like $350 and I made $3,500, right? It was a 1,011% winner. And so that's what I'm looking for here. I'm not looking to invest, you know, $100,000 to make $10,000. Does that make sense?
Perfect sense. Yeah.
All right. So that's the main thing that I'm looking at. Some of the other ones, you know, that I wanted to go through about earnings plays is one of my other favorite earnings plays to do with Market Chameleon data is what I call range plays. And an example of this is Microsoft. Microsoft, they had the earnings report. Literally, I had my buy order in and ready to go. It came down here, you know, and here's my timestamp saying, hey, I'm taking some Microsoft long. I got it at the range. I sold this as it came up into this 80. And I said, you know what? I'm actually going to keep the rest of this to see if we can get above 80. So at this point, it's kind of like a free trade, right? It's like even if Microsoft goes below its range to 260, you know what? I've taken half my profits out. That's my stop out, free trade. Let's go for it. And luckily, you know, Microsoft came out, earnings call, it shot up to 300. And this is why I love earnings. Like with Google, I took some Google long and I only got filled on 30 shares, right? I only got filled on 30 shares. So you guys do the math. What's 30 shares and, you know, a couple hundred points? It adds up. It's a lot of money. And that's why I love Market Chameleon. That's why I love earnings season, is because you get such range. And the way these range plays work, it's the same play, same sheet here. I have put in here what the ranges are, right? Range up, range down. And then I use VP to go in there to say, you know what, this matches up with some volume profile levels. I'm willing to get in right here. So I think this would be a good transition to talk about the volume profile and the webinar coming up. If nobody has any questions about the earnings, what do you think, Will?
Yeah, that's perfect, Donald. One question was why 30 shares and not calls? Are you like working with the stock better? Is that just your strategy?
So yeah, that's a great question. So the after hours, you know, they're not trading the calls and stuff. They're not trading. You can only buy or sell the stock. So I was doing this after hours. And so as I saw the report, I'm trying to get filled. I'm trying to buy any dip. And if you look at Google, it had this great dip down. Like it was this great dip down. It dipped down like 100 points and filled us real quick. So
gotcha.
Yeah.
So you took advantage of the illiquidity after markets and allowed you to get filled somewhere
Yep.
where in the options and something like that wouldn't happen.
Yes, and the other thing, I only sell options through earnings. I don't buy options through earnings because you can ask Dimitri, maybe I'm wrong, maybe I'm misunderstanding, but the odds are not in the favor of the people buying options going through, right? That's what implied move is. And so I'm with those guys that will sell options going through. So like selling a short straddle or something like that on Google, absolutely 100% believe. To hedge my position, if I sold one, then, you know, I got to buy 100 shares because I have to hedge that position to get it to protect myself. So I would be the one getting squeezed here. I'm willing to be squeezed on the plays that happen like this because they're not frequent. They're just not frequent. More often than not, you stay within that range. And if I'm wrong, Dimitri, feel free to correct me.
No, that's correct. And it seems like you have some type of game plan when that happens to you. You have a way of trading around that type of we'll say outsized move or or, squeeze move.
Yes.
So it looks like at some point you're also covering your risk, and then based on your analysis, you take certain other actions that have more often than not work in your favor.
Absolutely, 100%. I'll give you an example. I don't know if anybody remembers this or anybody was trading back here, but I had done that trade on Zoom. You guys remember when Zoom went from what was it, 330 to 500? It's just crazy, right? And then the whole market just shot up. It was kind of a crazy week after that. But I had to hedge my position. I was one of the people getting squeezed. So in order to hedge my position, what I actually did was I bought the shares, and I actually bought more than my hedged position because I wanted to make money on this move. And so I literally had to hedge my position here as Zoom went just crazy through the roof. So yes, 100%. And if you don't know how to hedge yourself in anything, if you don't know how to control your risk in anything, you shouldn't be doing it. Like, that's the number one job of a trader, is just controlling his risk. There's a few things that can happen to you as a trader. You're going to either make a little money, make a lot of money, break even, lose a little money, or lose a lot of money. And as a trader, if you can remove that lose a lot of money, just remove that from the equation. That's your first step in becoming profitable, because your only options now are lose a little money, break even, make a little money, make a lot of money, right? And I'm doing a smaller account with my group, just kind of show that even though I trade with bigger numbers, it's all the same thing. And if you look at the trades that I put on, like my P&L is literally, it's like, $400, $100, lose $3, $150, $180, $275 profit, $75 profit, 83 loss, right? And then I had this one home run play, $2,300, right? So you can see I won big one time, I won small like 5, 6, 7 times, and I lost small twice, right? So that's the first step, controlling that risk as a trader. So any other questions?
No, that's perfect, Donald. We did have one question. Trevor was asking, how does Donald determine when when traders are in a trap? I guess a squeeze is what he's asking.
Yeah. So, well, in this instance, in earnings, it's very obvious because we have that range, right? If we're outside of that range, they're trapped one way or the other. Another example is just the chart. And I'll give you an example. I play small caps. I love shorting these small cap run-ups. And there's certain times when I won't short, and then there's certain times where I'll say, you know what, there's enough people that are trapped to say, you know what, I'm willing to take the shot here. So yesterday, so on Monday, I said, you know what, I would only play this stock KSCP long. That's it. I'm not going to short this. There was plenty of, range to the short side you could have, but for me, risk-wise, it wasn't worth it. But in pre-market, what happened on this stock is they actually put out some news. It got a little pop and was immediately sold off. Well, the float on this stock is about 6 million, and it traded, I think it was 60 million, 70 million here. So let me ask Trevor, do you think that there's people that are trapped? Because price is opening down here. The float 6, 7 million, 70 million was traded. If you bought anywhere in here yesterday, would you be happy today? The answer is no, right? So this is where traders are trapped. The chart's going to tell you when traders are trapped. Another example would be, I think it was Goldman Sachs. They were putting out, and Will, maybe you know this stuff. They were putting out the amount. There were like trillions of dollars of puts being bought to hedge. Everybody looking for this big, huge sell-off, right? So everybody starts putting trillions of dollars in puts. Well, what happens if the market starts to bounce here? Do you think those people that are in puts are going to be happy? No, they're trapped, right? And for me, you always want to trade the trader. That's what VP is. You're always trading the trader. And so understanding where someone's cost basis is and what they're doing, that's like everything to me in trading. Everything that I do, even the earnings, that's what I do. I have to look and see where people are, understand their cost basis to figure out who's trapped, the shorts or the longs. Does that answer the question?
Yeah, no, that was awesome. They're very thankful. We only got about a minute left. Do you want to talk a little bit about the February 16th webinar we're going to be doing?
Yeah. So, one of the things the main thing that I use in my trading is volume profile. I honestly don't know why more people don't use it, or why it's not talked about, or maybe it's just misunderstood and people don't know how to use it. But for me, it's everything. I don't care what edge I use. I have, a dozen different edges. All of them use volume profile. And what this does is it allows you to figure out where traders are and you get levels. My whole trading philosophy is buy off support, sell at resistance. Well, how do you know? Is it the top of the flag? Not always. So what you're doing with volume profile is you're taking technical analysis and you're giving it steroids to figure out really where the bounce levels are. So that'll be what I go over on February 16th, understanding volume profile, getting into the very basics of volume profile, and then digging a little deeper to figure out how to apply it in trading.
Well, that's perfect. I know chameleons have been asking for that based on your other times on the show. Everyone's super interested in it. I put the link a couple times into the chat. Great show, Don.
All
Thanks
right.
for helping us out on the morning show. It's awesome today.
My pleasure. Good luck today, guys.
Donald, thank you very much. It was a great show. A lot of people interested. I see lively chat. So really appreciate you sharing that.
My pleasure, guys. My pleasure.
All right. It's the opening bell. Donald doesn't have a big bell that goes off, so you see everything really moving. Donald, good luck today. Chameleons, good luck. D, I'll see you later. Have a great trading day, everybody.
All right, guys.
Thanks,
Take care.
everyone.